Record. So I hope you guys had a good trading week last week. I mean, last week we had two assets that we looked into, and the two assets we looked into were USDCHF and then NZDCHF, if I'm not mistaken. Yes, and we had those two assets to look at. Remember, we had NZDCHF going in from Monday, and then taking profit as we go along, TP1, 2, and then 3. And then USDCHF, we do the same thing. We're going on Tuesday, TP1, 2, and 3. So just quick recap on that one. Let me just quickly take this off, make it much easier to read. So quick recap on that. Let's go with NZDCHF first that we went into, and basically we went in on Monday, and if I wasn't mistaken, our first TP1 should be around slightly higher than that, 25 pips. But what happened was price started moving up in our direction. Monday did a bit of consolidation. We are going on somewhere in the week. TP1 was hit, TP2 was hit, because I remember, I think last week I spoke about, resistance region, and there's a webinar replay for that one. And then TP2 was hit, but if you notice what happened, TP3 was not hit, and you probably got kicked out of the trade, but you will have got kicked out in profit. So ideally, this trade should have been very profitable for wherever I've taken it. Let's say let's assume you took it from here, for example, you'll have made at least ideally maybe 50 pips, 40 pips from that trade. And if you break that into 3 different sections, you probably have made 20 pips in one, maybe 30 pips in another, and maybe another 20 pips in another. So, maybe give or take 70 pips, from taking them all together. And the next one was the USDCHF. So we didn't go in on Monday. The entry was on Tuesday. Now look at what happened with that one beautifully. Up until Friday, we had it go up until 216 pips, but finished at 184 pips. So if you had gone with the TP1, 2, 3, as we spoke about already, in our previous webinar at the start of the year, you'll have profited from here, maybe here. I mean, we were even looking to come out somewhere around here. And then I remember on Telegram, I sent a message that TP2 was hit, and then TP3 is on free flow. So even if you've taken your first take profit, let's say here, your second take profit here, and you let the third one free flow, you could have closed on Friday, maybe somewhere around here if you wanted to, or you could have closed just before the market closed, maybe just at this candle for the market close and taking out your profit, because we already know we are exiting that trade on the Friday. So is there anyone that didn't make any profit from this trade or had any struggles with this trade? Please, if you have any struggles with it or you didn't make money from this trade, put that in the chat, or you can unmute yourself and talk to me, and I'll walk you through one or two things. And I noticed that there might be some new people with us today. If you're new with us today, thank you for coming. Welcome. And we can someone has their hands raised. Mr. Huzor, what are you saying? Talk to me. You can either chat or unmute yourself. Either ways, I'm good with it. I'll just give you about a few seconds.
Okay, I had a little bit of struggle on the side of getting my entry point. Entry point was my major difficulty on USDCHF.
Okay, entry. All right. Remember we have the 20, the 50, and the 200 EMAs, right, stacked up. So you have a few options for your entry. Let's say you already know your entries on Tuesday, right? So Tuesday would be, let me try to move this out of the way, make it easier for me to see. So Tuesday, if I'm not mistaken, the date should be 25th. Okay. So on the 25th, right here, right, what you could do is you have a few options to go. You can go on a lower time frame since we're entering on that specific date. So you can go up to an hour, and then on the 25th, started from somewhere around here, right? So started from somewhere around here. Now, given that you might not want to go into the market around here, because I normally recommend, wicks, you could have waited and see when price crossed above See when price crossed above the 50 EMA and the 20 EMA right here? My 50 is the red and my 20 is the blue, right? What you could have done is gone in directly underneath the support. So when price crossed over, just wait for price to retest the support of the EMA and just gone in. At that point, you would have actually had zero, literally zero pullbacks against you, and you could have rolled that trade. Now, let's say you didn't, you were still skeptical and you missed that entry, for example. Your next entry would be the breakout point. See right here, price broke out from it. Now, when price breaks away from somewhere, what you want to do is you want to let the price retest, right? Now, at this point, when price broke away from this region, price didn't retest. So in this scenario, you won't be able to go in here. Likewise, now look at the here. There's another breakout point, right? Price broke out from this section, and when price went away, guess what? Price retest. So that could have been your entry point, still on the 25th. Okay, so you could have gone in here at the support here, or you could have gone in here at that point. Let me just mark those spots right here. So your first entry could have been there. Your second entry could have also been here, right? Now, if you don't have, let's say for example, you do not have let's say the experience to figure it out this way. The other thing you can do for yourself, and I do recommend this for people that are starting off, is to get the PZ day trading indicator. So if you go on PZ day trading indicator, for example, what it would give you is where your entry will be. Now, let's say, for example, now on the 25th, when you came into the market and you're about to buy, what you would ideally go is go down to the 15 minutes on the PZ day trading, and let's go back to the 25th. So on the 25th, when price opened around here. See the PZ day trading gave you an entry just immediately. Like price opened somewhere around here. Let me move this up again so you can see. So price opened right here, 12 o'clock, right? So around 2 o'clock, PZ gave you an entry. This box, this blue box right here, that's your buy-in signal. So if you had gone in at your PZ buy signal and set your stop loss with your ATR value on 4 hours and ATR times 2 value, you'll be perfectly fine. So you could have used that to go in. And also the addition to the PZ day trading is you has to be above your 250 and 20 EMA. Someone is scribbling on my screen. Can you please delete that? Thank you. Thank you very much. And that would literally enable you to buy at that section. So you can buy here and then set your stop loss accordingly to the ATR ratio. You understand? That could also help you. Now, if you do not have PZ, you can use any entry indicator. So far, it gives you an entry above your 250 and 20 EMA. You'll be fine. Mr. Ozo, please speak to me.
Okay, well understood. I well understood, but my major challenge was that he started trending before then, but from what you explained now, I will now get it.
Yes.
I now get it. I will miss out to you. Thanks. Okay. Thanks so much.
You're highly welcome. Does anyone have any further questions in regards to that specific asset? Do you want me to look at something different? Please let me know so I would cover that now before we move on to today's one. Okay, I take that as a no for now. If you need to refer me back, then that's not a problem. I'll come back to it. I think someone wanted to speak. Someone trying to talk to me? Okay, we'll come back to that, guys. That's not. All right, so let's go to today. So for the guys that are very new, there's a few tools that I might need to point out to you guys. There's something called the seasonality tool, and this tool is basically used in specific ways. So everything in this world has seasons. There's time for everything in this world. If you trade, you don't want to trade every single day. Anybody that tells you that if you trade every single day, you'll be profitable, or all you need to do is make 5 pips every single day or 10 pips every single day, they're leading you to lose your money, period. Because you won't get it right every single day. There's no way on this planet you get it right every single day, and that's the beauty of the market. So what I would recommend is to do is, in order to trade professionally and to trade more sustainably, you have to know when to trade. And that's why we have the seasonality tool. So the seasonality tool act like this. During, you know, I normally use this as an example a lot. During Christmas time and during Ramadan period, the Muslim period, you tend to, price of cattle tend to go up during Ramadan, and price of chicken and turkey tends to go up during Christmas time. And after that period, the price falls, right? Those are just simple things. The same thing happens to every single market. A specific period of the year, the price goes up. There's a high demand for it. And a specific period of the year, the price goes down. There's too much supply of it in the market. So if you know the seasons when there's the high demand and there's the high supply, you can just ride the wave, you know? And that's why we have this tool called seasonality tool. So the seasonality tool would look something like this, right? Just wait for it to load. It would look something like this. So it's an average of 47, 15, and 5 years, you know, of the market. And it will show you the exact season in which price is meant to move. So for example, we know gold tend to go up during the December period and then try to fall around January a little bit, then start riding back up and all of that, you know. And the way we use this tool is to make sure that we check all 3 years are in alignment. So we don't go for small term moves like just from here to here. No, we don't do that. We look for moves that at least a week long, you know, 2 weeks, a month long. So you can hold that trade for a long period of time and make a decent amount of money. An example is this, for example, in the USDCHF, which we had for, was it 4 days trade, and it did all of this move. So your goal is to go in and try to take a big chunk of it as possible, not just come take a little chunk and run away, you know. So what we're gonna do today is, I won't be able to explain this in detail to everybody that is new, but you just have to follow along. And then if you have any questions, I would, you know, I'll come back to it. Can you guys mute your mic, please? And someone have their mic unmuted. Can you kindly mute your mic? Thank you. Okay, thank you. So today, for the guys that have been here today, so we're just gonna quickly dive into it. We've used quite a few of our time already. So we'll go to gold. Let's see what we have on gold. Let me just open notes. So gold, they're selling gold now. So gold on COT is going down. So I'm just gonna write COT. Oh yeah, there's another tool called COT, guys. This tool is basically it shows you what the commercials are doing, what the banks are doing, what the banks are doing, what the producers of specific assets are doing, what the market makers are doing. So it helps you align yourself with these guys. And there's 3 different categories: non-commercials, commercials, and non-reportable. Commercials are the big boys, the people that really know what's going on in the market. Non-commercials are like retail traders, people like you and me, some hedge fund guys, and you know, a little bit of people here and there. And non-reportable are just people with a heavy amount of cash that don't want to be disclosed, and you know, they trade. You know, some of them are like government workers and all of that. So, but we want to follow these guys right here, the commercial guys. And also long means buy, short means sell. Long means buy, short means sell. So yes, Mr. Uza, I'll check GBPUSD as we go along. So basically what we want to do now is we just want to look at what the commercials are doing in every single asset that we can lay our hands on, and then we would then make a consensus with that information. So COT report, gold short, which is sell. So I'm just going to put down gold, and then let's check CHF. CHF also is short. They're going down more. Short. CHF and JPY. Let's see what they're doing on JPY. So JPY, they're taking out positions from the long side and putting that to the short. So this is looking better than last week, because last week we didn't really see much assets in play. So this is good for us this week. So we might have a few opportunities to play with. Let's check JPY. Let's check Euro. Okay, Euro has nothing, so we leave Euro alone. They're taking out positions from the long and the short side. So the next thing we'll check is USD. Very small amount of position. short USD. So what I'm seeing right here across the board, it's like they're shorting most of the asset this week. And this is going to become very interesting very soon, because if they're shorting almost every single asset, then there's something about to happen in the market. I don't know what that is yet, but we'll see through the seasonality very soon. Maybe we can find a trade to capitalize on. Okay, GBP, they're buying. Good, beautiful. So long GBP. So just by looking at this, right, we already, you can already start forming your consensus of what you want to trade, to be quite frank. Remember, short means sell, long means buy. And AUD, we have that going short. Now, this is a little bit confusing. I don't like when the numbers are too close to each other, but I will still take it as short. But I would start that by the side. Okay, so AUD, I'm gonna put that as short, but star, and then NZD. Let's see what we got for NZD. Okay, NZD, we got long. And then yeah, no, that's what we got.
Let's check Euro.
Euro? Okay, I haven't checked Euro yet. Thank you very much. All right, where's Euro? All right, Euro, we checked Euro already. Euro, actually, they took positions away from both sides, so we won't count that. It's neither long nor short, because there's no addition to any of the sides, so they're just taking out positions. So we'll leave Euro alone for this week. So we don't really know what direction they're moving with Euro. So the next thing we'll do is we'll check the seasonality and see, what's happening with the seasonality chart. So let's check gold first. For example, we know that gold is already going short. That's what they're looking to see in gold. And if we see a short move coming in gold, then we might be able to sell gold. So gold, we see a short from 31st up until the 3rd. Now, that's questionable to me. Okay, still 4 days trade. I might be able to sell that. As I said, I really do not like to capitalize on small moves like this, but we might just be able to flip this because it's about 4 days. So let me check the probability. The next two is probability. This literally tells us the percentage that we're going to win or lose in that specific direction. So if this aligns with the, the analysis we see, then we might as well sell gold. Okay. So if we go 31st, okay, say sell 54%, 53, 50, okay, 60. Okay, so we can sell gold. Go short. Now, I know quite a few of you are actually skeptical of gold because gold does have a high fluctuation. It's more volatile. So, you might want to be careful when you trade this one. So we know that with gold now, it's short. So the next thing we just do is go to the chart, try to look for gold. Let's see what we go for gold. Right, cool. Gold is already falling even before the short starts. Now, so by looking at this, already, I already see gold already falling, So if gold is falling, it's been falling from the 26th, and it's falling before we expect. Let me see. All right. I mean, falling before we expect. Okay, 26, right? It told us it's gonna fall from about 24th to around 27, and then this is a little bit of consolidation, and then a little bit higher. What I would do with this is I'll be very, very careful. I wouldn't sell immediately on the 31st. So what I would do in this situation for gold is I'll wait for gold to pull back to around this range. So I think I already marked this out for a while ago. Can't remember when I marked this out, but let me just take that away from Ray. So I'm gonna wait for gold to pull back to around this level first. So what I want is gold to pull back around here, then only will I consider selling gold to go further down. The main reason is I won't jump into gold and sell gold is because whenever a price does a big movement, there would always be a pullback. That's literally the rules of the market. Price does a big move, there would always be a pullback. Literally every single time there will be a pullback. Big move up all to the way to here, and there's pullback back down here. So what's going to happen is now price comes down, there will be a pullback up here, and then whenever price gets here between now till maximum, I say Tuesday, I'll actually wait till maximum Tuesday. If price gets here by Tuesday, then consider selling gold to the downside, and you can sell that to ideally the end of the week, but you should be very careful and exit by the 3rd. So that will be Thursday. So the entry for gold in this case won't be totally clear. The main reason is price action. Price action didn't make it very clear. So what you're going to do is you're going to wait for gold to pull back in here. Maybe market will gap to the upside, does a wick. I don't know if it's going to do a wick, but you want gold to pull into around this zone. Now, the main reason I picked this zone is because this literally right here is a small pocket of liquidity right here. You can see that because there was a consolidation region around this part. And when price got to somewhere around here before, price got rejected down. So there's a likelihood when price comes back to that zone, it will reject again. Okay. So what you want to do is you want to wait for gold to pull back up to around that region and then sell, look for a sell entry from that region. Just the same way I just spoke to Mr. Uzo about your entry. Get your EMAs in play and then look for a price to hit your EMAs. You know what, matter of fact, let me load the EMA. Let me load the EMA right now. So right, let me delete that. So right now, okay, beautiful. So what I would do in this scenario is wait for price to pull to around here. So price will pull up to somewhere around here. Around the minimum entry point will be your 50 EMA. Maximum entry point will be your 20 EMA. There's a gap of 78 pips in between. I suggest you be patient and wait for price to move in between and then sell. Market is basically moving money from the impatient people to the patient people. So you have to learn to be patient. To make money here, you have to be extremely patient. So that would literally conclude what gold will do. So we wait for gold to pull back up and then sell from around this region. And if gold doesn't pull back here before Tuesday, don't take the trade, let the trade go. Is there any questions in regards to this trade before I check other assets that might be aligned? Is there any questions? Okay, good, beautiful. So in that case, then we'll let gold be. We've literally concluded gold analysis. The next thing we have to look at is CHF. So let's see what CHF is saying. Right. So currently on CHF right now, and we are right. So we are right here. Now, CHF actually told us we're going short, right? So what we can see from the seasonality is price doesn't look like it wants to go short. It doesn't look like it wants to go long. It actually looks sideways. If I isolate this to like the last 5 years, for example, I can see it's actually looking more like a bullish trend for me. And when I look at 15 years, let me isolate 15 years, also looks slightly bullish for me. So in that regard, for example, CHF will get nullified. We're not trading CHF this week. We got questions. Nasdaq, no problem. We're going to check that. We're going to check that quick time. All right. Next thing is JPY. So just like that, guys, you literally just want to nullify assets that you don't want to trade. You don't want to trade at all. So you make things a little bit much easier for yourself and you don't make mistakes. So the next asset we underline is JPY. And with the JPY, there's consolidation, but on the 4th, we have a drop. Now, the problem with on the 4th is on a Friday. Right, if I'm not mistaken. Yeah, it's on a Friday. So this is kind of one of them weekend old trades. And I might actually recommend we come back to this one on Monday, next week Monday, not this one, because there's still a lot of play, a lot of bite in this one. So we might have to come back to this next week Monday. But if we don't find any asset that aligns, then we might probably just look at it, but I don't want to, I want to take things as slow as steady. We having a clean portfolio this year, so we'll keep it that way. USD, let's see what USD is saying. Now USD is saying short also, so let's see if USD is going short. 30, no. So USD showing a little bit of short power coming in from 30 also to third and fourth. Now, if you know about correlations, right, USD and gold kind of move in opposite direction. Not 100% of the time. It's not 100% correlation, but they do move opposite, which then gives that fact that this move that we're expecting right here for gold to pull back up, it's necessary to wait for it, because just seeing this from the seasonality that USD is coming down from around the 31st to up until the 3rd gives me more confidence to wait for price to come within this region, right? So for that reason, I would recommend waiting on that gold trade to come into that zone, that region. But we're most likely going to take that trade together anyway. So with USD shows it's going to short from the 31st. Now, because the short is it's a small amount of short, I didn't really see a very massive volume with it. What we can do is quickly check probability to see if we can find anything that will support our USD claim. So if we check USDCHF, just check all the USD assets that we have in alignment. We should be able to see if we can find an asset in the USD that would align with what we want. So USDCHF shows in my short from 31st. We have a 54% chance of short on the 31st. We have a 56% chance on the 1st, 54% chance on the 2nd. So let's go check USDCHF. Let's see what we can find. All right, so where's that asset? Okay. This was the one we traded up, right? So this is beautiful because I don't even need to do much with this one. I mean, this is quite straightforward. Price is already pulled into this section right here. So price is already here, then the likelihood of the short that is coming is very high. So we wrote it up here. So we're going to write this asset actually back down. So what we're going to do is, for those guys that are actually very technical, you can see price here was literally, here was a double top. And if I probably pull back, okay, yeah, a double top at that point. Now, what price has done is that double top is already completed. Price came back and pulled into this region right here, the resistance region, and then price would end up going all the way back down. Now, with this one, the entry would be, let's see, should be, yeah, tomorrow. The entry should be tomorrow. Be careful though, on the 1st, we might have a little bit of bumpy ride on the 1st, but from the 2nd to the 3rd, we should be okay. So in this case, I'll say USDCHF. We're shortening USDCHF from Monday till might be Thursday or Wednesday. Thursday, I think. Yeah. Monday to Thursday. So that's what we're going to do with this asset. So we're going to short this asset USDCHF from Monday to Thursday quickly. We don't want to do too much. So all we're going to do is on Monday, same exact rules. Look at your EMAs. Now, because the EMA on 4 hours is too far, look at the 1 hour. What you can tell is if price goes below the 20 EMA, for example, on the 1 hour, wait for price to touch the 50, retest a resistance region around here, or retest the 20 EMA, just sell again from the 20 EMA and you should be fine. Stop loss would be your 4 hour ATR value, whichever value ATR gives you at that point. 26 pips, so ATR times 2, if I'm not mistaken, that should give you about 52 pips. So stop loss should be around 52 pips. If you can't afford 52 pips of stop loss and you have a very, very small size account, downsize your entry size. Going with 0.01, basically that would keep you safe, right? And yeah, so what you just need to do is wait for the price to break down from that EMA, touch the 50, rebounds on your 20. Once it rebounds on your 20, short that asset, take your first profit around your 200 EMA, or actually take your first profit to be safe at 26 pips. Take your next profit at your 20 EMA right here, and leave the last one to ride all the way till Thursday. Close your trade on Thursday. So I think that should be straightforward. So I'm gonna go to the next one, which is GBPUSD. Someone asked for GBPUSD. So let's check GBPUSD probability. It's actually loaded up right here. So 31st is a 50-50. Then we have a 54, 61, 71. So you already know, I mean, I don't like to take trades that are not 3 days in alignment for me. So if it's not 3 days in alignment for me, I would not touch that trade. So the percentage has to be 3 days in alignment for me, then I will touch that trade. If it's not, I won't touch it at all. So with GBPUSD, my guy, I ain't gonna even touch that at all. That would not be a trade that I will touch. Okay, so I hope that explains the GBPUSD. But for clarification's sake, let's say you've been in it from last week, for example, GBPUSD, as I said, is something I don't even want to touch. So I just let it go, man. I'll let it go. I won't touch it. Not at all. I won't touch it. I don't know what it's gonna do. It could either go up, it could either go down. It doesn't give me too much clarity. So for that reason, I won't chase it. In comparison to USDCHF, for example, that we just looked at, this one looks more straightforward. You already seen it going all the way up here. And you already know when price does an up move, it will definitely pull back down. Just like what it did here, pull back down. I don't see it going up here doing a double top, you know. So what I'll do is I'll just wait for price to do a little bit of pull up somewhere around here, do a wick, maybe somewhere around here should be sufficient enough for me. Then sell that back down. Ideally, maybe we'll make 138 pips from that. We're gonna go to Nasdaq soon. Yeah, so GBP is already having that, and if you look at the COT report, it's the only one that literally had a very massive long position into it. So the interest rate, you know, announcement might be they might increase the interest rate, in which if they do increase the interest rate in the long term, GBP will become very, very bullish and very strong. And because we don't have too much time, let me just quickly pull up the seasonality for GBP, and then I'll quickly run to Nasdaq. So if we look at that, so GBP is going to be on a downfall anyway. Look, it should be falling from Jan, right? And then it's been falling. It's probably going to pull back around February a little bit, but it should fall. So interest rate increase could start kicking in somewhere around March. Initially, you will see a shortwave increase, a shortwave kick. But if they do increase that interest rate in March, then we can actually take this long move that's going to happen in March all the way to the top till about April. So, you know, it is good to just be patient for that time to come so you can take a huge chunk of that money out. You know, currently right now, though, I will just let it slide. Okay, let's quickly go to seasonality for stocks and check Nasdaq for the Nasdaq folks. Bro, we got to share that Nasdaq money, by the way. You know, you've been taking some good money from that Nasdaq for a while now. Just letting you know. I might have to holler at you privately for that one. Just quickly gonna reload the page. Do have a little bit of technicals with the old seasonality charts, but okay, it's loaded. Beautiful. So Nasdaq, this is where we are right now at Nasdaq. Remember, with the Nasdaq one, we do not have probability, neither do we have. I'm not sure actually. We might have probability now, but we don't have COT for it yet. So Nasdaq might actually down. So, bro, whatever you do in Nasdaq, be careful. If you're gonna short, then you know you might be on that track. So Nasdaq might actually short this time around. So the short might happen between 31st or 2nd. You know. So you might actually short that to maybe around here, the 8th, or maybe the 7th. So be careful for that short. That short is coming. So I hope that literally helps everybody out with the trade for this week. So the trade for this week would be, USDCHF going short. Gold also is also short, but you know you have to wait for gold to pull up to that entry zone before you short gold. Okay, so as you know, I don't like to trade too much. You just trade what you need to trade, and let the rest go. That's how you secure your money and you don't blow your account. So if you have questions for me, guys, just pop in the chat room. We can have a quick conversation right there. I hope this session isn't boring because I try to make it as short as possible. And I hope it's been fun for everyone that attended. For all the guys that are new, guys, welcome to the team, and we wish to make some more profit with you guys along. So thank you very much for attending, guys. If you have any questions, just hit me up on Telegram. I'll be able to answer them all for you. Thank you very much. Take good care of yourself, and happy hunting, happy trading. Take care, guys.
Lot of news.
Huh?
News this week.
Sorry?
I think they shouldn't forget a lot of news this week.
Yes,
Even
yes.
the NPA news is this week, so if you trade carefully.
Okay, yeah, thank you very much, man. Guys, you guys are listening. Don't forget, a lot of news coming up this week. You can see the COT report also going fractic about it, everything going short. So be careful, guys. Don't go lose money. Trade only if you need to. If you don't have to, don't trade. Just let it go. All right, guys, take good care of yourself. Stay safe. Make that money. Make your family happy. Take good care of yourself, guys. God bless you all.